of these the purpose of these questions is just to get the answers going and then make sure that these sort of answers are coming out through your deck. So what are the top 5 reasons someone should invest with me? Obviously, that's really important. Another really important one is what aspects of your new fund, or by the way, this also is the same questions that I do if I'm working with a client on fund 2, fund 3, fund 4. So we can say new fund or existing fund. What aspects of your fund have been compelling to investors from any preliminary conversations and what haven't? So the answer to that first part of the question, what aspects have been compelling, those will probably be repetitive to that, what are the top 5 reasons someone should invest with me, but maybe not. And then what aspects haven't been compelling? Those are really important to know because you have to be realistic with yourself. I get nervous when I'm working with a founder and I ask, what are the greatest risks to this investment? Or what should I be concerned about if I'm an investor? And the founder says nothing, because it's just simply not true. Whenever you're making any investment, it's very speculative and people are going to have risks and concerns. So instead of giving a whole pitch and then leaving them up to have concerns at the end of the pitch, what I try to do is get ahead of those questions and concerns by secretly layering in answers that mitigate those risks throughout the deck without being so obvious that that's what I'm doing. So as I mentioned, say you don't have any experience and you're trying to raise a fund, what we would do is build up in the early part of the deck why you actually do have experience, though maybe it's not traditional experience that others are used to seeing, so that at the end of the deck, they won't say, oh, but you don't have any experience. Another important question is, what are the burning questions investors will have about your fund? So sort of a silly example, but say you're a man and you're going out to raise a women's wellness fund. I mean, one of the burning questions might be, why are you suited at raising a women's wellness fund? And maybe you are perfectly suited, but you need to answer why. So just thinking about any obvious questions they're going to have, making sure you get ahead and answer them. Another important thing to pull out is, what unique insider information or different perspective do you have? This works for funds. This also works for companies. People see value in other alternative ways of looking at the world. So if you happen to know something for whatever reason that someone else doesn't know, I would take an opportunity to infuse that in your materials. Another question, what does my fund do? Why is it doing it? And how does it do it better than similar funds? So this is a big difference from a company deck versus a fund deck. I don't typically see a competitor page in startup VC funds where you're saying, oh, you could invest with me, or you could invest with Imaginary or Bain. I don't see that in funds. However, people are still thinking about that. So they're thinking, okay, I have this amount of assets to allocate, and how should I allocate them? Why should I invest with a startup fund manager, for example, when I could invest with a trusted fund manager? Give me a reason why I might actually get better returns with you. Or maybe even not just from a financial perspective, say you're a value investor or an impact investor. How are you going to create value for a community or for the world such that I should risk putting my money with you and not someone else? And that dovetails with, why does my fund need to exist? Something that you definitely want to address in the deck. And then again, what are the top risks preventing someone from investing with me? What are the mitigants? And those mitigants are what you're going to want to infuse through your deck. And then lastly, even if the investor does commit, what are any outstanding fears, concerns, or risks that they might have? And how can those be softened? So again, this isn't now just saying, okay, we need to get this investor to say yes, but just because they say yes to you doesn't mean they're still going to commit come commitment day or paperwork day. So just getting ahead of any additional concerns that they might have, or even just information requests. So I like to stage my decks so that the first 25 to 40% is the super compelling pieces. Then the remaining 25% or so is stuff that's still compelling, but a little bit more check the box. And then the last few slides just check the box information that someone's going to need to know, because I really want to leave them with as much information as they can to say yes, sign off, sign the paperwork without coming back to me with a ton of questions. And this is my standard outline for a fund deck. So I noted on here that some of these subjects can overlap. You won't always need one bullet point, one slide, but that's really how I would start to approach it, at least from your storyboarding. And then you can maybe merge a few slides together, maybe even pull out, and maybe, for example, your mission, very rare, but needs 2 slides. But this is how I would begin to think about it. So I would ask myself the questions that we just went over. Then I would flip over to this fund deck outline and I would say, okay, is there anything I missed in my questions that I need to write out here? Again, flow of conscious. Then once you have your 2 sets of questions and answers, then you start cutting, copying, and organize based on this outline. And I take this same approach for a brand new fund, or fund 2, fund 3, fund 4, or let's say a large fund that's starting a new and different fund with a different strategy. I take the same approach, even if I've already worked with the client. So for example, Dragonfly Capital, I've worked with them on 3 different funds so far, and I still reapproach this with them at the start of each new fund launch, because it's very common for funds to change strategies even slightly from fund 1 to fund 2 or fund 3. And I think it's always important to take a fresh set of eyes and really truly ask these base level questions like, who are you? How do you look at the world? Where do you see opportunity? And where do you see your vision for looking at investments? And especially how you look at the world. So I always say, and this is actually a term in professional writing, which is show, don't tell. So an example of that is saying, telling is, everybody loves oranges. And then I want to say, okay, you're telling me everybody loves oranges, but how do I know that everybody loves oranges? I don't want to just take your word for it. So a more compelling stat to convince me that everyone loves oranges is something like 95% of Americans drink orange juice every day. So that second style of approach, which is showing instead of telling, is really important when you're supporting how you look at the world, where you see opportunity. So don't just say everyone's moving from computers to mobile, but put a hard stat behind it instead. Say 95% of people use a cell phone every day and only 10% of people use a computer every day, for example. So these hard stats are really important, especially if you're an emerging fund manager, in supporting how you look at the world, because I don't want to just take your word for it. I want to see hard stats as to why the trends that you think are going to continue to happen are happening today. So the first bullet, who are you? Launch date, what you do, why you do it, and how you're going to do it. Then how you look at the world, where you see opportunity or your vision. So that could say, I look at the world as being 100% on autonomous electric vehicles in the next 5 years. And here's why. Here's 5 market data stats that support why I believe that's going to happen. And then your mission could be, for example, I'm going to source and invest in businesses for the next wave of the electric vehicle economy. Any business that's creating any technology that's going to support electric vehicles, I'm going to want to talk to them if they have a great management team, for example, because I 100% believe electric vehicles are taking over the world. Then your approach, I would say, is a somewhat of an optional slide for a fund deck. It depends. For me, again, just keeping the electric vehicle example, I would say my approach might be how I will plan on sourcing deals, or how I plan on finding these new market opportunities, bringing them into my pipeline, and then winning a piece of the deal. Because another thing to think about if you're an emerging fund manager is, if a deal is really hot and a founder is getting a ton of term sheets, why would they accept your money if you're an unproven manager versus the money of somebody like a Lair Hippo, who I know is going to help me or has some brand cachet that is going to make the investment look impressive to other people? So that's where you might talk about on your approach. Then a next core slide that's important is the potential market size. Now, it's not like a company where I'm saying, okay, there's going to be $5 billion of spend in autonomous vehicles. It's more like the market size of investment opportunities, right? So if you're telling me I'm only going to invest in companies that support the next world of electric vehicles, then I want to make sure that you have a lot of investment opportunities within your target geography to source. Because if there's only going to be 5 companies, then obviously that's not going to be super compelling for me to give you my money to invest. Then another big important thing is sort of your value add. This is what I said about getting into deals. So just because you have money doesn't mean that everyone's going to accept it. So what are you bringing to the table to support the founders or your portfolio companies as sort of an individual basis or also as a network effect? Maybe, for example, you're going to source deals within the electric vehicle community on the supplier side, and then also in the car part side and the marketing side. And all 3 of them in tandem will get access to some unique platform that you're building, and they'll all be able to work together. This isn't that unique, and they'll all get discounts with each other or something. But the point is just creating some value add within your ecosystem. And then another key detail that makes it compelling to go with your fund if you haven't already covered it. Then of course, team is really important. So why you are going to be the best at sourcing and executing these deals. And then we're going into sort of portfolio and how you plan on constructing that. Again, I'm talking about this from the fact that this is a new fund, but only with a 1% tweak would I ask these questions if you were an existing fund. So what's your evaluation criteria or investment funnel? So say there's 1,000 businesses you're looking at. I want to get a sense for, if I'm in your brain, how are you going to look at those 1,000 businesses to wheedle them down to 10 investment opportunities or 20 investment opportunities? I want to know what your criteria is for evaluating a company. And then further, okay, so you have 1,000 companies, and let's say you've decided that you want to analyze 50. Then I want to know too, what's in your brain of those 50 companies? How are you looking at them? And what different metrics are you evaluating to decide if you want to invest in those companies? Then your target portfolio mix is a sample slide that if you're a VC fund, you might not necessarily do. I mean, you could say we're targeting, let's say 50% of our fund is going to be seed and 50% is going to be pre-seed and Series A. That's what I mean by target portfolio mix. Or you could say 25% US, 75% international, or 1/3 consumer, 1/3 healthcare, 1/3 autonomous vehicles, if you have some sense. But I would just say, I got that in here, is I usually see portfolio mix a little bit more if we're dealing with sort of a fund of funds strategy. So I have one client that's doing 25% direct investments, 75% fund of funds, for example. So just for background. And then I accidentally included the team here twice. That's a mistake. It should only be here once. Then next is track record, if relevant. So if you're an emerging fund manager, maybe you have no track record, at least in the way that people typically think about track record. But is there some other way that you can make it seem like you have a track record? So for example, what if you had a small angel portfolio? Even if you invested only $1,000 or $5,000 in a few different deals, I would put them as my case studies. Let's say I've invested into 3 different successful angel investments, then I probably would put their little logos and describe the companies and what I did to invest in them and sort of how they're performing. And I would call that my track record. Now, it's definitely different than if you had a different fund before or you came from a prior fund, but you need to get really creative if you're starting out on how you can speak to track record. Lastly, your key terms. This is the check the box about how much am I raising? What's the minimum investment, term, incentive fees, all those things that someone just needs to know, and then a legal disclaimer. So now with the remaining time, I'm going to flip you through slide by slide by slide so you can see a real deck in process and what it looks like for each of these bullets. So here's Metrodora. Metrodora is a client that I worked with in 2020. And this client is unique. So all companies are unique. This one was particularly unique in that Union Square Ventures was talking to the two founders of Metrodora, and basically Union Square Ventures has a strategy of wanting to back emerging new fund managers. So USV said to these two women, we want to back you. We want to commit 5% of capital to you. And we want to actually be on your investment committee and help you source and find deals. But other than that, we'll stay sort of hands off. We want you to be a separate brand. And this is the deck that I put together with these two women in order to secure that backing from Union Square Ventures. And then this is also the deck that we subsequently added more detail in and used for them to execute on their fundraise. So when Chelsea and Caroline came to me with this idea, just for background, all it was about half a page on a Word document. And then from that half a page of the Word document, and then my questioning of them in those stream of conscious that you saw, and then also the topics, we came up with this. And we also came up with the logo, the colors, the look and feel. Again, this is actually quite a low bar when it comes to branding, but it's totally all that you need if you're executing a first fund. So you always start with the cover slide, investment opportunity, the year. Just so you know, I don't put the month, I just put the year, because I don't necessarily want people to know how long I'm out fundraising in case the fundraise takes longer than I expected. So here's who we are, introducing Metrodora. Getting this sort of 1 and 2 first sentences takes a lot of time, just getting them right and succinct. So a seed stage shared value venture capital fund focusing on healthcare, education, and consumer businesses in the US and Canada. We partner with entrepreneurs who are authentically, purpose-driven to shape the future. And then a couple bullet points down on the bottom. So what I wanted to accomplish with this slide was basically, if they don't pay attention to anything and they could only see one slide about our fund, what is it? That's this slide. So it's sort of a mix of investment highlights and a executive summary. So we say what Metrodora is, and then we have a couple bullets on the bottom that really are selling the team, talking about the size and geography of the fund, and then strategic partnership with Union Square Ventures is obviously very compelling. So we put it on the first page. And then here's our vision slide, backed with fundamental data and research. So you don't have to just take our word for it. You can see the research. So we will focus on entrepreneurs that create economic value by providing social value. So then we talk on the right about how we're filtering for ideas, what markets they're in, what type of returns we're targeting. And then we have proof with market data that's been sourced at the bottom, the fact that sustainable investment is a huge and growing trend. In fact, it's $30 trillion, which is a huge, huge dollar amount. And then this was sort of a mission slide. It's a quote from somebody else, but it was just sort of taking it again to a higher, dreamier level. This is value investing. So there's a bit of minor pulling at the heartstrings, right? That comes along with, of course, generating a superior return. So here's an HBS quote that just supports the fact that giving back via investing is a virtuous cycle. And then this slide 11 is sort of our market sizing slide. So this is what I was saying. Again, let's say you see 5 themes happening and you want to invest around those themes. Don't just tell me about those themes. Give me actual market research data that supports those themes. So this is us saying that growth will be fueled in the broader economy by new entrants who want to drive social good. And then we have a few themes that are really punchy, easily to see visually with little icons, but then actually backed by facts that are sourced to the original article. And then here's our filter slide. So we will focus on large, historically antiquated industries. And then just so you know, one thing I like when I'm building decks is this idea of having a title and a subtitle. So I feel like the subtitle still gets a little bit punchy information before you get lost in the content of the slide, but it still is lifted up above the content of the slide. And instead of saying, you'll notice, like, I'm not saying on here, this is my investment filter as the title, or this is the market size. I like to make the title descriptive to say actually what I want to say to the person that's hearing this pitch. And then here's our value add. So we will build Metrodora to be the founder's partner of choice. And this slide is intentionally very vague. So professional networks, VC relationships, entrepreneur networks. The big purpose of this slide is to say that these two female founders will have differentiated sources of deal flow and community that no one else will have. And Caroline Cassie is one of the co-managers of this fund. The other person is Chelsea Clinton, of Bill Clinton's daughter. So she didn't want to put down on the slide, oh, I'm Chelsea Clinton, so obviously I'm going to have some type of preferential treatment or super unique networks. She was really sensitive to the fact of anybody sort of getting this in their hands and seeing that she might be misinterpreting, that she might be bragging or taking advantage of any of her particular networks. So this slide is meant to be intentionally vague for the fact that if she's pitching live, she'll say what she wants to say, but she didn't want it to potentially get in the hands of somebody who would misconstrue what she was saying. And so here's our team slide: experienced professionals evaluating companies through a new lens. We have Caroline Cassie, who I worked with actually previously when I worked at Casa. She and I are both in blockchain and crypto, who originally came to me with this deal. And she actually had a very easy time talking to me about her background that I was able to copyright in here, where Chelsea, for example, has really spent a lot of time trying to figure out not to come off as braggadocious. So it was a bit more like pulling teeth to get her to really tell me what's compelling about her as a manager. And that's where sometimes I would say it can be beneficial to work with a coach if you're having trouble talking about yourself and why you're great at doing something. Of course, you're not supposed to brag in a way that will turn someone off, but if you're trying to convince someone to give you money, you need to explain to them why they should give you that money, or they're not going to give it to you, right? So thinking about on the bio slide always, what are hyper relevant details, what's not relevant, and what's compelling enough that supports this particular deal today. And then you see at the bottom, strategic partner, Union Square Ventures is obviously a huge thing. And I thought it was a natural place to sort of include it here on the team slide. And then we have our investment criteria. So besides a fit with our core mission, we will evaluate deals with the following filters. And then quite literally bullets that explain exactly what kind of filters. And then if you're an emerging fund manager instead of an existing fund, I like to give you examples. So for example, here's a couple different type of companies that I would invest in. I just think it helps the reader understand a bit more really how you look at deals and what type of companies you want to invest in. And then taking it a step further, again, this is for new fund managers. If you're an existing fund, I don't think you need to do this, but here are sample actionable investment opportunities. So actually pretend like your fund exists today and find two companies that are actually fundraising and say, hey, if this fund existed today, I would have participated in this deal or that deal. Here's my thesis. Here's how I sourced it. And here's how I would think about the deal. And you probably don't realize just from looking at this, but a really important part of this slide, if you look on each of these, it says source inbound. So what we were saying was that these particular fund managers, because of who they were and their connections, have really superior access to deal flow that other people don't get, right? Most people aren't getting inbounds on really great deals just without any background, but these two people are, and that's why you should invest with them. Lastly, our key terms, target raise, minimum investment fees, capital commitment, and then stage, and thank you. Maybe a legal disclaimer. Yeah, funds usually have a legal disclaimer after that. So that one we spent more detailed in. Now I'm just going to click through high level so you can see again how somebody else might approach this in the last 2-3 minutes, and then we'll go to Q&A. So Here's another emerging fund manager. This is Imaginary. I worked with them, I think in 2018. And this deck in front of you. So by the way, I'll pull it back. Metrodora was successful in fundraising. So they were successful in fundraising off of that deck. They just never publicly disclosed the amount that they ended up raising, but they started making investments. Now, Imaginary actually did a press release following this deck. They raised a $75 million fund. And you'll see again, there's two fund co-managers. One is Nick Brown, who had a past VC track record. And so they raised a much larger fund than potentially someone with less experience. But again, I just want to click through so you have a visual example of similar type of questions, similar type of topic and outline, but how it could look different with your unique fund. So we have a slide here on their thesis. Again, it's a quote from someone else. And then who we are. So think about comparing this back to the Metrodora Who We Are, where we had 2 sentences and then 5 bullets at the bottom. That was a bit more like an investment highlights who we are, where this is more just quite literally introducing who we are, where we're going to invest, what the portfolio mix is, and what our mission is. And then here's our vision for the world. This is how we see the world going, and backed again by hard market data, right? So don't take our word for it. Here's the market data that supports our vision.
Talk to you, but like,
and then how you
like
see
if
the world. Sorry. So, okay, someone was talking. So how you see the world, backed in market data, the proof that you are right. So this slide here was our own analysis. It wasn't actually something that we just found on the internet. It was, okay, if we see the world this way, can we think of some custom way to prove that that's actually true? And that was this slide here. So this is the proof that what I just said on the prior slides is accurate. And then you have your investment criteria here. Sample investments. Remember before we said, okay, if I had the money today, or if I had the money 2 years ago, here's some names that I would have invested in. To just give people a bit more context, it's easier to wrap your brain around if you're receiving this pitch. Additional thesis support. Here's our team. I want to spend a bit more time on the team page. You know, how is this team great? So again, the title doesn't say team. The title says what I want the person receiving this message to say, which is, we will use our unique network, expertise, and track record to build Imaginary as a category leader. And we talk about Nick Brown, who I mentioned, had prior VC experience as a partner of 14W. And then he's co-founding this with Natalie Massenet, who founded Net-a-Porter. So basically, Natalie had massive experience in retail, particularly direct-to-consumer retail. And this fund was all about direct-to-consumer retail. So that's why these two are a great team. And then here's our investment funnel, quite literally shown visually. In the Metrodora deck, we didn't actually put names in, but here we actually were able to put names and show as a funnel, really sort of our competitive page. So you might want to look at other VC funds that invest in traditional tech, but there's only such a minor one of those that have an appetite towards direct-to-consumer category, and then are consumer focused, and that's Imaginary, the only fund to invest with if you actually believe our thesis. And then investment criteria, again, how after you've sourced investments, how you're going to look at them. And then lastly, track record, sample investments. Everlane and Glossier were prior investments that Nick Brown made his last fund. So we're showing them sort of as our new fund track record. We understand that it's not relevant to this fund in terms of it wasn't names in a prior fund. Still though, a manager in this fund worked on those last names. And then Daily Harvest, we put around in dashes saying, here's an imaginary opportunity that we would actually execute on if we can get the money in closed in time. And as you probably know now, Daily Harvest is everywhere. So this was a really good call out, given this was back in 2018. Legal notice, and then a thank you page. Sometimes I like to put the email of the founder there as well. So I had another deck, but we're running short of time. So I think you guys get the point. I'm just going to bring it back to the very bottom here. So before you go, right, you've done your stream of conscious, you've done your content and copywriting, you prepared your slides, passed them through design. The final step is just going through and cross-referencing that outline, saying, is there anything I'm missing in this deck? Did I optimize my slide titles? Am I saying what I really want them to take home afterwards? Is there consistent branding? Is there attention to detail everywhere? Logo on every slide, page numbers? If I have any type of financials or numbers, is it consistently formatted? And last but not least, can I deliver it in 10 minutes or less? And I'd say, of course, you can do this yourself. You can work with someone like myself, or a branding partner or a coach that can help you suss out sort of these reasons to invest. But all of these tips and tricks can be applied yourself as you're going through this. And last but not least, we'll hand it over to Q&A. But if anyone wants to get in touch with me after this session, my website is literally my name, kellylyons.com. Or you can get an email with me, kelly@kellylyons.com. My Twitter is also my name. Feel free to reach out and feel free to check our Twitter for more examples of screenshots of sample slides, approaches, all that stuff. And that's it. I'll stop sharing and open it up to questions.
Wonderful. Thank you so much, Kelly. The first question is from Grace. How often are new funds able to be successful in raising capital, sustain their business long term when so much of early stage venture is super competitive and brand based?
Okay, the answer is I don't know. So I frankly just have no concept of who goes out to raise a fund and doesn't raise the fund, because every client I've worked with has raised their fund. But of course, I'm not working with any random person off the street, right? There's obviously a cost element involved with working with someone like me. So I find the founders and fund managers I work with already have some level and some bar of professionalism, or they obviously have money to afford this type of service, right? So they probably were CEOs somewhere else before, fund managers before. They're not completely random people coming to this. So I know that they have all been successful, but I'm sure there's many people that have been unsuccessful.
Great. And from Shadman, what strategies people without much experience raising funds how do they market their plan relative to a more established one?
So you broke up for a second. I just want to understand. This is somebody without a track record?
Yeah, so a new fundraiser. So potentially without a track record, but also potentially maybe they haven't even raised funds for a business that they started. Someone who's completely new to the process.
Yeah, so that's where I was saying that if you don't have a track record, you still have to have a track record, if that makes sense. So even if your track record isn't, oh, my last fund returned 5x, you should think, how can I have a track record? Meaning, even if it's not in investing, maybe it's in operating. And so your track record is the fact that you've operated multiple businesses in the industry that you're going to target investing in. So just by track record, I mean, really, what is your relevant experience? So perhaps it isn't a formal track record, but maybe it's that you've worked at companies similarly, or you've invented a technology before that is the technology you're going to use to find these new investments. But track record, if you don't have what you think of as a traditional track record, should just be replaced with experience. And frankly, if you have zero experience and you're going out to raise a fund, I would say good luck to you. You should, I'm not trying to shoot down anyone's dreams, but that's going to be hard. Maybe consider partnering with somebody to learn the ropes a bit and understanding like a little bit more about what you can do, because I will say it'd be a pretty high upward battle unless you have some extreme investor connections to raise a fund with zero background.
Do you have recommendations to the funds that you work with around what types of investors they should be looking for, or whether there's different pitches for different types of limited partners, or does that factor into the process?
I'd say that's actually not so much of what we do. So we do that when it comes to startup founders that we work with, because There's a true strategy around targeting how to reach investors when you're an angel or seed, pre-seed versus series B plus. There's a real strategy around who's an angel, who's a pre-seed, but with funds, unfortunately, it's not quite so pretty and organized like that. So when you're an emerging fund manager, besides falling under certain regulatory concerns, like certain people need to have certain levels of net worth in order to invest in your fund, they don't really segue out investors in such a way that's easy to think about like that. Obviously, you have individual investors, you have funds that are making fund of funds, you have family offices, you have high net worth individuals. But outside of that, I tend to not have much more advice. What I find with my fund managers is that even if they're emerging and brand new, they're still coming to this with a list of contacts. And it's really those contacts they use to leverage. So it's about finding 3 to 5 sort of friendly investors who you happen to know already, hopefully, or you've made connections with, that can then help introduce you to more investors. There's always the best way to fundraise is to get one investor that's giving you their money to introduce you to other potential investors, because that's really them putting their money where their mouth is. And it sort of just becomes this web of investors. I will say you can use PitchBook to find investors. Sort of it's an expensive data set, but you can work through people like me or other people that have that data set that can spit out tailored list of investors. I also, just from my networks, have lists of investors, and there's places even on Twitter that you can find databases of investors, but it's certainly not clean and it takes a lot of work, unfortunately, that part of it.
That actually leads well into the next question. What are your thoughts on cold emailing and funds reaching out to potential LPs by cold email and sharing their decks?
So I always, obviously, I feel like it's obvious, but a warm intro is better. Of course, if you can't get a warm intro, then I would always suggest do cold email before doing no email. However, like I really have no shame. Whenever I want to meet somebody, I go through LinkedIn and I'll reach out to someone I haven't talked to in 10 years, like whatever. The worst they can say is no. But whenever I ask someone to make a warm intro, I don't just say, hey, can you introduce me to so-and-so? I pitch it to the person who I want to make the intro. I say, hey, I'm doing this thing. I saw so-and-so is also involved. I have this unique angle of looking at it. I think they would love to look at this. If you feel comfortable, would you mind introducing me? I can send you a blurb so that you don't really need to think about what to say. So I'll actually write the intro email for the introducer, just making it as easy as possible. The issue with cold email is VCs just get so many cold emails that they just have kind of turned on this thing in their brain to ignore them. And I mean, I have it myself. I actually started a cold email campaign and got like 0 responses. So I have proof that it doesn't really work, but honestly, it works maybe 1% of the time. And that 1% person could turn into a real investor. So if you have to do it, I would do it, but I'd still have no shame in looking for a warm introduction. And then also I'll say, once you finish your pitch deck, I work with clients then to sort of write 2 emails. One email is the cold email. The second email is the warm email. And just what are the 3 to 5 major points you want to say in the email to tee up a pitch meeting. And I never include my deck in that. I'll select sometimes maybe 3 or 4 slides that I'll put together as like a send ahead deck. And maybe I'll include that, but never ever the whole deck, because my intention is to pitch to you the deck live and then have the deck sort of make the content live off of the page. But I don't want them sitting there reading it without my pitching and then misinterpreting some of my points.
Great. Are there places where you've seen the VCs that you work with get stuck? Like, are there particular parts of the presentations that you walked us through where it's like, you really have to push them on this particular element of it?
That's interesting. So it depends on the manager. Definitely, so, like I mentioned, Chelsea was super weird about talking about her background and bio, where if I'm working with other founders, they don't care. They'll brag on and on and on about what they've done in the past. So it's a bit personal. I will say the biggest hole areas where I find I personally add value is basically in the areas where founders just haven't thought through it yet. So like that investment funnel, an investment criteria, a lot of times I'll get to the place where I'll ask them that and the manager will say, oh, I needed that. Oh, I didn't think about that. And I'll say, listen, if you have really great networks and an amazing track record, maybe you don't need it. But if you don't, it's always safer, better to add more detail. So it's always better, especially if you're starting out, be overly detailed in your strategy and your thinking. And put that in there. But if you don't need it, you don't need it. So some people are unwilling to commit. Like they don't want to say, here's my investment criteria, because they want to be able to change it however many times they want. And more power to you. If you can get away with raising $50 million with a 3-slide deck, I actually think you should do that. However, if you can't get away with that, it's always better to follow the exact outline I gave and really include and hit on all those points. And I'd say one other place people typically don't think of is the sample investments. So the whole, oh, if I had the money today, I'd invest in these 3 names. Here's why, here's the thesis. I think that's like really amazing extra credit bonus if you've thought through that.
How do you do your diligence on the clients that you work with? Or is there a diligence process that you go through to evaluate, like, will this person be successful? Can I be helpful to them?
Yeah. So it's a tricky thing with me because I want to have new business and I want it to be quality. At the same time, I can't spend weeks diligencing these potential clients because we're a very small team of a few people. So I have to say, like, it's a bit of a gut instinct with how they come in. It also really depends on their experience and their sort of leadership bio. So some clients actually pay me a mix of cash and equity. Some also pay a mix of cash on a success basis as well as an upfront deposit. So those success-based clients, for example, like I definitely spend more time diligencing their track record and leadership. But I would say even myself, I'm a bit risk averse to a brand new fund manager that came off the street. So that person, I probably would not extend a success-based offer to. However, if you're Imaginary Ventures and I've worked with you on Fund 1 and 2, you're coming to me for Fund 3, of course, I'm going to consider extending that type of pricing. So I probably look at it similar to the way an investor would actually look at it, but with a bit lower bar, unfortunately, just because I don't have the time to confirm that that bar is as high as I would if I was actually putting money into the opportunity.
Yeah, makes sense. Do you give them any advice around like the size of the fund that they should be raising or like the strategy around that?
I would say typically I don't typically advise. So all the funds I have worked with are people that had prior funds, to be clear. I haven't worked again with someone that just came at this brand new. So they typically come to me with an idea of the strategy and the fund size. I can work with them. Let's say like they were making an apple pie. They bring the apples. I can add the other ingredients and then together we make it an apple pie. But the fund manager really shows up at least with the apple component of it, like a clear view of how they see the world, because that's what makes it super unique and compelling and interesting. And if I had an idea that was as good as your emerging fund manager idea, then I would just go out and raise my own fund. So how I work with clients and how basically my suggestion you work with yourself is that we're sort of like, it doesn't matter the geography, it doesn't matter the target size of the company or the industry. It's more of a method and framework of zhuzhing out the most important information, wrapping it in a beautiful way that's compelling, that I do, more than sitting around and thinking of radical new investment strategies.
Great. I know we're coming up on the end of time. Any other questions for Kelly from the group?
Yeah, I just see, I mean, if we have time, I might see someone asking about crypto at Casa.
Yeah, go for it.
Kind of off topic, but when I was at Casa, crypto was sort of hot in the very beginning. It was 2018. Then by the end of 2019, we had gone through what people call a crypto winter. So Casa was in a bit of an issue because they needed to fundraise in order to stay in business in the middle of crypto winter, which for people that don't know means like the price had plummeted. It was maybe at like $3,000 for Bitcoin. So crypto is super volatile, and the fact that like if the market's hot, the VCs are ripping, raging, they want to invest in the businesses. But then as you can see, even today, it can turn on an absolute dime and they will sit on their cash and not make new investments in companies, because almost every crypto VC I know also has a mandate to buy Bitcoin and crypto themselves as well. So basically, like if the market plummets for the price of Bitcoin, they would rather switch their funds into buying Bitcoin and the coins themselves than actually the funds behind Bitcoin that could actually, or the companies behind Bitcoin that actually create processes to use it. So I would say that's more of a problem to be known if you're a founder in crypto, is that if you're fundraising, you should really try to get a huge cash reserve whenever the market's hot, because the markets just do not react like normal markets and normal cadences, and you could easily run out of money.
Do you intend to grow your team at Lionshare?
I do. If you're interested, go to our website and send us a note. And then someone's asking about the legal disclaimer.
Yep.
I actually forget what the legal disclaimer says, because typically that's the thing I don't do. I send it over to them, they plop it in, but I'm sure it's just a bit of covering our bases, because if you give someone a fund, it's like the biggest trust me style investment. Like if I invest in the stock market, there's a bunch of rules. If I invest in a credit fund, there's a bunch of rules. But venture capital specifically, it's almost like I give you my money and I have no concept of where it's going, and and you are not going to guarantee returns. So it's usually around like, hey, this, all of what I just pitched you is completely and utterly made up. It's not backed by any proof. I can't guarantee I will do anything of it. I might actually fail and you can't sue me. That's usually the nature of those disclaimers.
Yeah, I would say the bullet points are generally past performance is not a guarantee of future performance. These are unregulated securities in private market and they're very illiquid. Everything that I said is totally hypothetical and like can't promise that you will get any returns, but more specifically, you could lose literally all of your money. So funds usually have like a compliance consultant or they have their legal counsel draft that for them, but it's pretty boilerplate. You can probably find it on the internet.
Yeah.
All right. Any other last minute questions, or Kelly, maybe any last minute advice for some of our cohort who may be thinking about raising funds in the future?
Yeah, I'd say that just to pull it back, this framework can be useful if you want to launch a new fund, or it can be just as useful if you're going to a larger fund and they're thinking about their next deck or their next round of fundraising. So I wouldn't just write it off. You're saying, oh, I'm going to go work at another fund. It's just as relevant, regardless if you're new or you're working with somebody else. And just that, again, the number one core of pitching to me for every slide is just saying, what am I saying? And am I saying it clearly in a way that makes sense, that this person is going to believe what I'm saying? So every word on the page, make sure that it deserves to be on the page, that it's adding value, that it's supporting your pitch. And don't be afraid to brag about yourself in the right way when it comes to the team page.
Awesome. Well, thank you, Kelly, so much for your time. Enjoy your vacation coming up, and everybody, we will see you on Thursday. Have a great rest of the week.
Thank you.
Bye.